All right, everybody, stock market update number 7. I'm Ryan Mallory, and we're going to talk about the S&P 500, how it closed out the week, what we should expect going forward, and the 5 stocks that I'm going to be looking at when this market does eventually bottom. So let's go ahead and jump right into it first with the S&P 500 on the weekly chart. Long-term trend line off of the 2016 lows, still providing some resistance for the S&P 500. 2 weeks in a row, we've tested it, unable to break through it. The 200-week moving average, not breaking either. Price range this week is actually the tightest that we've seen it. It's still a whopping 194 points on the S&P 500. For any other week, that would be huge under normal situations. Obviously, we're not in normal situations, but compared to any other week, it's the smallest one we've seen so far. The previous one was the 1 week where we finished slightly higher. That was about 225 points. This week, it was 194 points. What does this tell you? It shows you that there's a little bit of indecision in the market. Not as big of a price range. The other thing I would note too is 2 straight weeks of declining volume. You take SPY, for instance, we have declining volume day after day right now. Right now, we're way below recent averages. In the last 2 days that we've rallied, one of the things that have been a big concern to me is the breadth isn't there. What is the market breadth? It's basically the difference between the advancers and decliners. How many stocks are advancing for every stock that's declining? On the down days, like what we saw back on Thursday, we saw a declining breadth of about 13 to 1, meaning 13 stocks were declining for every one that was advancing. But on the last 2 rallies, the breadth hasn't been that good. It's been barely positive, and at sometimes during the day, it's actually been negative. That means there's still a lot of stocks that are going down, even though the market's been able to advance. And much of the advancement this week has been on the heels of an energy rally. And energy is one of the worst sectors out there. I mean, until the rally this week, that thing had been knocked down about 60% in the last 3 months. Because we're seeing a tight end price range, one of the things that's being affected by it is the volatility index. The volatility is actually going down because the price range is not as big, the volume's getting less, there's not as much panic selling, even though that we're still seeing days where the stock market is going down considerably. It's not doing it in a panic-like fashion, it's doing it much more methodically. But the VIX on Friday closed at the lowest price level since March 6th. It's come off quite a bit from the highs of when we were hitting 85 and almost 90. So now let's talk about the 5 stocks that I'm going to be looking at when the market finally does bottom, whether it's next week or a month from now. What are the stocks that I'm going to want to be looking at to get long on? First off, you have Apple. Now you have this long-term trend line off of the 2013 lows. It's still intact today. If this market takes the leg down lower like I expect it to do in the coming weeks or maybe in a month from now, this price level at around 175 to 190 becomes a very possible landing spot for Apple to go down to. However, if the bottom's already in, then on the daily chart, you may have what could be a nice little base forming here that if it can break out above this 259 area, and the market indeed has put into a bottom, then all of a sudden that you have a nice breakout play that could see the stock price go back up to 300. My second favorite play is Visa. Visa has a great trend line off of the October 2014 lows that has remained intact through this whole thing. Yes, it's tested it, but it quickly rebounded before the end of the week to hold that trend line. It's right back down there again. So indeed, if this is the bottom of the market, which I still, of course, have my doubts on, this could be a good place to go ahead and start building a long position. If that does not work, then you're going to want to see a move down to this 134, 135 area, a retest of the recent lows, and if that can hold, then you might have a base that starts forming that you can go long on. Nobody's given enough credit for Nvidia and how well it's handling this market storm. Yes, it's at 243, and yes, it was as high as 320 almost. But this thing is still staying intact. If it does retest this 205 area, that might be a place to get long on. If that fails to hold, then let's look at a price maybe down in the 150s. That's pretty dramatic. I don't expect it to get that bad on Nvidia, but if it does, you know that there's some solid support there that you might be able to build a long position from. Unlike the stock market, Caterpillar has put in 2 solid weeks in a row, and that's more than what most stocks can say. Again, if there's a market bottom in place, then you have a nice base forming here on CAT that you might want to get long on. If not, then check out this long-term chart again. If it can get back down into the 88, 89 area, then you have a nice long-term support level that you can buy off of. Finally, the most risky one is going to be the Walt Disney Company, DIS. Obviously, they've been hit hard because they have cruise lines, they have entertainment, they have theme parks. All of them are shut down. They're not doing good right now because they're not operational. However, once those come back online, this one has a lot of potential, especially if it can break above the 20-day moving average, which has acted as resistance to this point. When you look at the monthly chart on DIS, and you can see here, there is some multi-year support here. It's already tested, it broke through it on the intraday, but reclaimed it back on the monthly chart. And you can see $90 tends to be this support level that price is kind of glued to. Right now it's at $93. If it breaks below 90, I'm probably going to back off and just see where it wants to form a base thereafter. But there you have it. Apple, Visa, Nvidia, Caterpillar, Disney. If you don't like Apple, I also like Microsoft. If you don't like Nvidia, I like AMD. If you want something with a little bit more action to it, LRCX. I'm not crazy about it, but I do like AMD and I do like Nvidia. If you don't like Disney, I also like SBUX, a little bit less risky, but it's also one that's being hit pretty hard by this coronavirus. So keep those 5 plays in mind and the alternatives, and keep a good watch on this market. Be ready to buy when the market finally does bottom, but you don't have to get right in at the bottom. You can let the base form. The market's not going to go back to all-time highs overnight, so be patient. Don't get all long at once. Dip your toes in the water, trade at a time. Don't get 100% long or go into margin. You don't have to do that to be successful in the market. These are difficult times. The trading's difficult. You've got to be willing to manage the risk, use stop losses, and don't be afraid to be wrong. If you find yourself wrong in a trade, it's not going right, it's not the way you predicted it to go, get out. That's all you got to do. Just get out. Take the loss and be ready to take on the next trade. Live to trade another day, folks, and you'll be just fine. Take care. God bless.